Good morning, and thank you for joining us to discuss UGE International's third quarter fiscal 2021 financial results. On the call today, we have UGE CEO Nick Blitterswyk and UGE CFO Stephanie Bird. During the call, all participants are in a listen-only mode. Following the presentation, we will conduct a question and answer session. We've collected investor questions via email, but you can also submit your questions through the Q&A tab in the web portal at any time, and management will answer them following the prepared remarks. Before management discusses the results, I'd like to remind everyone that certain statements in this call may be forward-looking in nature. These include statements involving known and unknown risks, uncertainties, and other factors that could cause actual results to differ materially from those expressed or implied in our forward-looking statements. For caveats about forward-looking statements and risk factors, please see our MD&A for the year ended December 31st, 2020, which can be found on our company profile at sedar.com and on the company's website. I will pass the call over to UGE CEO Nick Blitterswyk. Nick?
Thanks, Marcel. Good morning and welcome to everyone on the call. My name is Nick Blitterswyk, CEO of UGE International, and I'm joined today by our CFO, Stephanie Bird. For today's Q3 webinar, I'll begin by summarizing our key business highlights for the quarter. Next, Stephanie will run through our Q3 financial results, and from there, I'll provide some concluding remarks with a look towards the future. We will then take questions and wrap up the webinar. As a reminder, you can submit a question through the portal on the left-hand side of your screen, and we'll run through questions at the end of the webinar. As always, our goal is to be mindful of your time and keep this webinar concise and to the point. We'll be speaking relatively high level and focusing on the areas that we feel are most important to understanding our business and financial results. Our website address is listed here as well, where you can download our full financials. We also want to remind our listeners that we report in US dollars, so the results in this webinar are represented in US dollars as well, unless addressed otherwise. So with that, let's start by talking about our key business results in the quarter. I'll start off by talking about our project development pipeline, which once again saw substantial activity in the quarter. Here you see the pipeline table taken from our MD&A. When we zoom in on the early stages of the pipeline, you see that the top of the funnel has grown dramatically so far this year. To break it down, we had 113 megawatts in these pipeline stages at the beginning of the year. At the end of the second quarter, it had basically tripled to 358 megawatts. As of September 30th, our pipeline had doubled yet again to 790 megawatts, which has continued to grow further since quarter end. For example, last week we announced the addition of over 100 megawatts of solar and storage projects in Massachusetts, a new state for UGE, and the third new market we've entered in 2021. These are almost all additions on top of what we see here. In terms of what is driving this growth, first and foremost, I want to call attention to the work we've been doing to grow our origination and development efforts. Starting in March, we recruited several additional members to our origination team, which has given us greater reach throughout our markets, and these new team members have hit the ground running, translating to pipeline that will feed our project backlog in the coming quarters and operational projects thereafter. Of course, I'd be remiss not to reference longer-serving members of our origination team as well, who have been also having a great year. Our pipeline growth also speaks to the opportunities available in our market right now and the work we've done to be a leader in this space. On the next slide, we see our project backlog, which is represented by projects in stages 3.1 to 5. We've also seen strong growth in our backlog throughout the year, from 60 megawatts at the beginning of the year to over 116 megawatts at the end of Q3. As noted in our subsequent events, our backlog has already scaled to 145 megawatts as of yesterday, smashing through our 2021 target of 120 megawatts. Within Q3, we had one US project with a capacity of 740 kilowatts reach notice to proceed and is now in construction. We expect project deployments to ramp considerably in 2022 as our backlog matures. As mentioned on prior calls, the time spent at each of these stages is not equal. To illustrate, we currently have approximately 10 megawatts of projects, which we expect to move into stages 4 and 5 by the end of Q1, several of which are currently in stage 3.1 as they await final interconnection approval. On this slide, we see the operating portfolio. In the big picture, these numbers are still low compared with our medium-term goal of 100 megawatts of operating assets, but we've seen growth of almost 100% since the beginning of the year. We now have a full quarter of our newest operational project in the US being reported, and look forward to being able to report operations for the projects currently in deployment in early 2022. One note is that smaller projects tend to be quicker to deploy, and so our current operating portfolio has a smaller average project size than our overall backlog by a significant factor. Here, our operating portfolio averages about 200 kilowatts per project, which compares to approximately 3 megawatts per project for our overall backlog. Looking at the broader picture, we see a pipeline as of September 30th of 790 megawatts, which was 7 times that at the beginning of the year. A backlog of 116 megawatts, which is almost double that at the beginning of the year, and operational projects of 1.5 megawatts, again, almost double that at the beginning of the year, for a total portfolio of 908 megawatts. On my last slide, before turning things over to Stephanie, we wanted to highlight a few other important updates. First is that our pipeline activity has continued to be impressive so far in Q4. Notably, as we disclosed last week, and as I mentioned above, we entered Massachusetts, our third new state this year, starting with more than 100 megawatts of solar plus storage and standalone storage projects that are now in early stages of development. The first projects from the pipeline are expected to enter UGE's backlog by the end of this calendar year and be built within 24 months. We also announced a partnership with T-Mobile in November to provide clean energy to offset their energy consumption. The contract supports T-Mobile's commitment to power its business using 100% renewable energy. In the market itself, there continues to be significant movement. Progress continues to be made in several states and on the national stage as well. Last week, President Biden signed the bipartisan infrastructure bill, which includes approximately $73 billion for the electricity grid. Now we turn our attention to the Build Back Better Act, which the House passed last week and has explicit support from President Biden, with the Senate being the last hurdle to overcome. The Build Back Better Act includes significant incentives directed specifically at our industry. It includes a 10-year extension of the federal investment tax credit at a 30% rate, up from the current 26% rate. It also includes a provision to allow direct payment of this incentive, as opposed to needing to use it to offset taxable income, which provides a meaningful additional benefit to developers like UGE. The bill further includes incentives which would drive down our input costs, as well as additional incentives towards low and moderate income communities, which our community solar projects often fall within. Taken together, the Build Back Better Act would be a very significant tailwind for our industry, so we're watching it closely. Of course, it seems that everyone has been impacted by supply chain disruptions of late, and the solar industry is no exception. In particular, solar panels have increased in price this year by about 10%. Fortunately, we have not yet encountered a project where supply chain disruptions have caused us to purposely delay a project. We are also starting to see some light at the end of the tunnel. In the past 2 weeks, there have been 3 positive moves from the Biden administration. The first was to reject a petition to extend tariffs to several manufacturers in Southeast Asian countries, which account for a significant portion of the U.S. import market. The threat of retroactive tariffs has significantly slowed shipments into the U.S. Second was a change in language related to restrictions around material from Xinjiang, China, which should make it easier for manufacturers to show that their panels are compliant for import into the U.S. And finally, last week a ruling removed tariffs on importing bifacial solar panels, which is a product we frequently use in our ground mount projects. Taken together, we have good confidence that we should see pricing improvements going into 2022, especially when combined with historical increases in manufacturing capacity within the industry currently underway. We also see these moves as further validation of the Biden administration's significant support towards the solar industry. Lastly, we continue to have financing discussions for our upcoming project deployments. The funding environment continues to be very strong. We are optimistic that our expectation of compressing interest rates as our volumes of deployment grow will hold, and look forward to sharing our progress after our next close. For tax equity, we continue to be pleased with terms and availability, and of course are watching for that potential direct pay provision that I mentioned earlier. We're also seeing good availability for development capital, which is a debt product available for mature solar developers like UGE, and provides funding for development for the period before projects reach notice to proceed. Such a facility would provide UGE with a non-dilutive source of capital as our backlog continues to grow and mature. I will now turn it over to Stephanie to summarize our Q3 financial results, and then I'll return for some concluding remarks before taking your questions.
Thank you, Nick, and thank you for joining us today. I'm going to review a few key items in our Q3 financial results. So looking at this slide number 9, For the third quarter of fiscal 2021, UGE earned $465,000 of revenue from client-financed agreements, Philippine projects, and engineering services, decreasing from $528,000 in Q2 of 2021 and increasing almost 3 times from Q3 of 2020. These changes from prior periods are due primarily to the timing of projects progressing from contracting to construction. Year-to-date, UGE has earned $1.4 million from client-financed agreements compared to $1 million in year-to-date 2020. In part, the increase year-over-year reflects the easing of COVID-19 restrictions compared with 2020. UGE's energy generation increased 26% from the second quarter's 235,000 kilowatt hours to 295,000 kilowatt hours in Q3. This translated into about $65,000 of revenue in the third quarter versus $47,000 in the second quarter and $16,000 in Q3 of 2020. Energy generation year-to-date 2021 is 633,000 kilowatt hours, producing $137,000 in recurring revenue. These numbers will be influenced by seasonality and the number of projects moving into operations as we move forward. Turning to gross margins, during the third quarter of 2021, our gross margin on client-financed and consulting revenue was 14% versus 37% in the prior quarter and 38% in the year-ago quarter. The primary reason for the change was due to an accrual taken for equipment on our Philippines projects currently in construction. For the first 9 months of fiscal 2021, gross margin was 25% compared to 27% in the 2020 comparable period. Operating expenses in the third quarter were $1.5 million compared to $853,000 in Q3 2020. The increase in year-over-year quarterly operating expenses reflects a full quarter of headcount additions, which were mainly to our origination and development teams in the first half of the year. As well, operating expenses in the third quarter of 2020 benefited from temporary salary reductions and cost-saving measures related to the COVID-19 pandemic. For the first 9 months of fiscal 2021, operating expenses grew to $3.9 million from $2.6 million in the 2020 comparable period. The increase was likewise due to a combination of increased headcount in 2021 and decreased costs in 2020 that were related to the COVID-19 pandemic. Adjusted EBITDA in the third quarter of fiscal 2021 was $1.2 million loss versus a $662,000 loss in Q3 of 2020. And for the first 9 months of fiscal 2021, adjusted EBITDA was $3 million loss compared to $2 million loss in the first 9 months of 2020. Net loss for the third quarter of fiscal 2021 was $1.3 million versus the $349,000 net income in the year-ago quarter. We note that Q3 of 2020 benefited from $1.2 million of other income versus just $104,000 of other income in the third quarter of 2021. For the first 9 months of fiscal 2021, UGE's net loss was $3.2 million compared to the $1.1 million net loss in the comparable 2020 period. As a reminder, we are in the process of transitioning from a one-time revenue model to a recurring revenue model, and losses are expected until the company's self-finance portfolio reaches a larger scale of project deployments and operational projects. Even so, it's important to note that developing and building projects can create positive cash flows through the development cycle by the retention of a developer fee, and this is despite accounting revenue not being recognized until the project is operational. We ended the quarter with 50 staff, steady with the 50 staff at the end of Q2 and up from 36 at the beginning of the year. As we saw in Q3, we expect more measured growth in cost over the next few quarters as the company executes on its growth and deployment strategy. Moving to the next slide, let's take a look at our financial position. We exited the quarter with $1.3 million of cash, $739,000 of current debt, and a $1.8 million working capital deficit. With respect to our cash balance, we have earned cash from a small number of client finance projects, as well as our core continuing cash flow sources of developer fees, engineering services, and operating solar facilities. Our core continuing cash flows are not yet at the scale to have positive net cash results. So as we continue to scale up our development efforts and the backlog matures to yield more projects in deployment, cash inflows from the developer fees in particular will provide us with improved stability in our cash balance. Our balance sheet has been growing as projects progress through our backlog. Leases add to both our long-term assets and long-term liabilities, and the quarter-over-quarter growth for both the ROU assets and the offsetting lease liabilities reflects the impact of 7 new long-term leases signed in the quarter. Also notable is the recording in Q3 of the receipt of a $262,000 government grant on our last project put into operation in Q2. This had the effect of decreasing the solar facilities in use as well as their project debt balances. We also received a government-sponsored COVID loan in Q3, and post the end of the quarter, we completed a 2 million Canadian dollar convertible note raise that will be reflected in our November cash balance. We also saw the conversion of our former 720,000 Canadian dollar convertible note into shares. That concludes my prepared remarks, and I'll turn it back to Nick now.
Thanks so much, Stephanie. As you can see, we are making solid progress towards our goals. In 2021, we set out to grow our origination and development efforts to capture a greater share of this fast-growing market and to achieve greater scale as an organization. Our 116 megawatts of backlog at the end of Q3 almost pushed UGE past the 120 megawatt goal we targeted for the end of the year, and we are proud to announce we have since exceeded that goal with a backlog as of yesterday of 145 megawatts. With the growth in our pipeline and backlog, we are in a great position to exceed our 2024 goal of having 100 megawatts of operating assets as well. Of course, we really see 100 megawatts of operating assets as just the tip of the iceberg for this business. Our secondary 2024 goal, set just at the beginning of this year, was to grow our team so that we could achieve 100 megawatts of new backlog per year by 2024. Based on our growth this year, it is possible that we reach this figure this year, which would be 3 years ahead of schedule. With that, we'll wrap up the prepared remarks by pointing you to where you can find more information. As mentioned earlier, our website is regularly updated and contains all of our financial filings and other updates. You can also find our financial filings on sedar.com. You can also visit Sophic Capital's website for additional information and follow us on Twitter to get links to announcements and other media. Thanks again for tuning in today. Marcel, back to you.
Thank you, Nick. We've collected the questions investors have submitted since issuing the financial results, and we've also collected the questions submitted through the web portal's Q&A tab. We'd like to thank all of you participants for your questions. Moving on to our first question. Have you seen much inflationary pressures in the business thus far, in terms of component shipping or other? If so, what is the strategy to pass through rising costs?
I can take that. So I mentioned earlier that solar panel prices have increased about 10% this year, give or take. That is the input that we've seen the biggest change in. But at the same time, even with that increase, we are about within the contingencies that we hold in our projects anyway. So like I said, there hasn't been a reason for us to lay any projects as of yet. Across the other components, we haven't seen material changes just yet. And like I said, we are seeing light at the end of the tunnel with some of the recent announcements, and hoping that shipping costs stabilize going into the new year as well.
With regards to the recent offtake agreements with Bloomberg and T-Mobile, should we anticipate project-related funding costs to decline in the respective markets where the offtakes are in place?
I would say that, I did mention earlier that we're already expecting our financing costs to decrease as our volumes increase. And I think associated with that, I know from our conversations that associated with that type of offtake helps lower the rates we're paying on debt for our projects as well, yes.
Should we anticipate some seasonality in energy production revenue as we enter the winter months?
I can take that one if you want, Nick.
Perfect. Yeah, go for it.
So there will be some seasonality. It does depend on what market we're in. There's some places where they smooth the billing, in which case, but the seasonality you'll generally see in the summer months, higher production revenue, and in the winter months lower.
What are you seeing in terms of timelines for projects moving through the backlog? Any changes from interconnection approval times, supply chain, etc.?
Yeah, I would say that really, where that will, so what are those two possibilities, interconnection versus supply chain? It's really more on the interconnection, potentially permitting, where you would see those impacts. And then once you get to stage 4, NTP and our backlog, that is where supply chain considerations would come into effect. So on our last, I think, 2 calls, we talked about the interconnection process in Maine this year is slower than expected. And that's been a result of the pretty big wave of projects being developed in Maine. And we're, of course, one of the earlier companies to get into developing solar projects in that state. Since we last met 3 months ago, we haven't seen material changes to that. And in fact, the projects we were expecting to get into to NTP around the end of this year and into early next year, we're very much on track to do just that. I'd be remiss not to call attention that the stages we have in our backlog, it's not uniform in terms of the amount of time that projects spend in each one. And if I take like one of our main ground mount projects as an example, that stage 3.1, where we wait for interconnection approval, is by far the longest time. And in fact, because it takes so long, we're often able to get the other stages done in the meantime. And so, right now we're prepping about 10 megawatts of projects to reach NTP in the next couple months here, the next few months. A significant portion of those are actually currently sitting in 3.1 as they just wait for their interconnection approval. So I hope that helps a little bit in terms of how people think about the progression of that backlog. I also should say, those stages were set up a good couple of years ago now, and as more of our backlog has moved towards ground mount projects, it's something for us to consider on our end, whether we provide maybe a greater level of breakdown or something like that within that first bucket.
Yeah, and a follow on to that, this prior question you just answered, more specifically, can you expand on how you and the team are thinking about meeting the apparent strong demand T-Mobile has for New York City projects?
Marcel, just to make sure I understand that correctly, you're saying how we're thinking about T-Mobile's strong demand for projects in New York area, is that right?
Yeah, and how you're going to move the projects through the backlog for that.
Gotcha. Well, a couple of things I'll note on that. I'd say that number one, our rooftop projects do move a bit more quickly than our ground mount projects. And the prior guidance that we've given is about 9 to 18 months from entering backlog to operational project for rooftops, as opposed to 18 to 36 months for ground mount. So on that basis, we're moving things forward at a pretty good clip, we would say. One part of that T-Mobile agreement is for us to be able to bring in projects from other developers too, and in essence, be paid a finder's fee for doing so. And so that's another way that we're helping T-Mobile reach their goals, because they do have pretty substantial demand within the New York City area, which is primarily where we're helping them at this time.
When do you think you'll be in a position to add the Massachusetts battery storage projects to the backlog? And when do you think those will begin to reach operation?
A couple important points on that. So the reason that we came up with that announcement last week is largely around, we felt that pipeline, that 100 megawatts plus that we announced, was mature enough for us to say, okay, we're officially in Massachusetts and so on. So that 100 megawatts, those are all projects that actually already have client commitments. But because it's a new state for us, we haven't officially moved them into backlog as of yesterday. But we are expecting the first ones to fall into backlog by the end of the year as they complete the first interconnection stage. So, out of that 100 megawatts, I wouldn't be expecting, I wouldn't be expecting more than a third to be in backlog by the end of this quarter, but we would expect, a majority of them by the end of Q1. And I'd be remiss not to say that on top of that 100 megawatts, which is almost all since September 30th, we do have additional pipeline opportunities as well. So we look at that state to be a pretty meaningful one for us going forward here.
What are the economics of storage?
Stephanie, I'll let you take that one.
Sure. There are differences between storage and solar, but generally, if you're looking at modeling it out, you can, for the same kilowatts DC on a storage project, you can take the same sort of economic output as being about the same as between storage and solar.
A couple of related questions to your growth targets. Results this year have been terrific from a pipeline and backlog growth standpoint. I think it's safe to say that your current 2024 goals of 100 megawatts of operating, 100 megawatts of backlog will be met. Any thoughts on updating those?
I think that's fair. We are ahead of our goals for this year. And if I go back, I know for example, like the letter at the beginning of the MD&A from our year-end results talked about this year really being focused on developing increasing the size of our backlog. And we thought the 120 megawatt goal was a bit of a stretch goal to start with. And of course, we've gone right through that by a substantial margin. So when we look forward to 2024, we are growing ever more confident about being able to exceed that goal. In terms of when we'll come back and maybe think about revising that goal, it's something that we're going through, of course, our budgeting process for 2022 and so on right now. So let's talk again in Q1, but definitely excited for how the business is growing here.
And a related question, do you intend to provide any 2022 goals or targets? If so, when might you look to do that? And might you look to introduce a target for operational projects?
Yeah, a couple things I'll mention. I think at this point in time, as a baseline, we feel very confident that we will have completed construction on or be in construction on at least 25 megawatts of projects in 2022. And of course, we mentioned a couple times already that we're currently prepping about 10 megawatts per construction. So when you compare that to our current operational portfolio of about 1.5 megawatts, you see that next year is really going to be about scaling up our deployments. And so we're excited for that. For the overall year as a baseline, we expect, again, at least 25 megawatts to come out. In January, we will, as we do in our normal course, put out an announcement that summarizes our milestones from Q4. And at that point in time, will give us a bit better look to some of our expectations for 2022 as well.
Any updates you can give us on your access to project level debt? Are you still considering pooling some projects together for a lower cost of borrowing?
Yeah, for sure. Like on this 10 megawatts that we mentioned a few times, we are in the market right now for the debt on those projects. We mentioned in prior calls that we had looked for both at the end of the year to see our debt costs drop below 5%. Our most recent closing was at 5.5. As of right now, we feel very confident that we'll be substantially below that 5% mark in our next close. And a good portion of the reason for that, in addition to the maturation of UGE and the growth of UGE, is the fact that we're pooling more megawatts together at one point in time.
And related to that, are you being offered debt financing at early stages of the development cycle than before?
Yeah. If I understand that question correctly, we the construction of perm debt that we closed on in the past, that is really working on that at stage 4 and using that to carry the project into and through operation. I did mention in some of my prepared remarks that development capital facilities are becoming increasingly available to us as well. And so we're definitely getting offers for that type of capital. And so really, this is the type of capital that you could leverage really from stages 3.1 to stage 4 to fund the development of these projects and so on. So that's something we're looking at very closely right now and would be, of course, a non-dilutive source of capital for us to continue to scale up as we are.
Is selling part of your future energy generation to a royalty stream or another form of non-dilutive financing?
It is potentially. I'll say that we're very cost of capital focused, and so on that basis, looking at what options would be right for us, and right now that's been more along the lines of the development capital facilities and also the construction of perm debt. But certainly that's something that we've taken a look at before, and we'll continue to take a look at as well.
In what stages, for example, 3.1, 3.2, etc., can UGE choose to take developer fees in the form of cash on the balance sheet? And based on your backlog expectations over the next 6 months, what is the range in dollar amounts could UGE choose to receive and record as cash and use as working capital?
Stephanie, you take that one?
Sure. So a good estimate for what we can draw for cash for developer fees, put it around about 20 cents a watt. And if you take that 10 million that we're prepping for construction, translates to about 2 million cash available to UGE from those developer fees in 2022. And then expand that out to the 25 that we want to get out. It gives you get out by the end of the year. It kind of gives you a good range of where we're going to be or where we expect to be for next year.
Another question. I would like to understand in detail when cash flows from operations cover operating expenses and the business stops needing external financing to finance its growth in order to achieve 2024 guidance.
you want me to take that one again?
Yeah, sure.
So I think that if we take a look at a couple of things as we are looking with what with both of us has said in the prepared remarks and the answers to some of the questions, we've got development capital that we're taking a look at. We know that we're going to be able to have the developer fees as we come through, and then the operating projects on by the end of the year. We feel that with those three non-dilutive sources, we will have the bridge in place that then gets us to when we're going to have the operating projects deal with our operating expenses.
It appears as though UGE lost 5 megawatts of secured stage 3.2 backlog from Q4 2020 that did not fall down into further secured stages towards notice to proceed. Is that the case?
Yeah, I can take that one. So there, I think from stage 3.2, there has been some positive progression. There was also one project that is still committed. It still has interconnection approval, which is what puts it in stage 3.2, but it is it is stuck up in not because of our project, but because on the property there is some other development going on that is taking longer than expected, and it originates from COVID, which had delayed the original build out plans for that property. So that's actually, I should say, one of our closest real estate relationships that we have. So we're still hopeful that we'll be moving forward on that project, but we also like to be very conservative with the information we put out there. So for the time being, that we did move it back a stage, but we'll look to have positive progression on that project as soon as possible.
What is the current time estimate to deploy current backlog for stages 3.2 and higher?
I know earlier I talked about the overall time frame of 9 to 18 months for rooftops and 18 to 36 for ground mounts. If it's stage 3.2 or higher, what you see is that the vast majority of those projects right now are either in construction or moving pretty quickly towards construction. So and then of course we mentioned earlier that stage 3.1 has some projects that we're also expecting to get into construction by about the end of Q1 as well.
100 megawatts of projects in Massachusetts, is that pipeline or backlog, and what's the split?
Yeah, I know I answered that question sort of indirectly earlier, but when we announced it last week, that was all still considered pipeline. If you look at our pipeline, we have stages 1, 2, and 3.0, which are in pipeline. So I believe that all of that 100 megawatts was in 3.0. So committed with the client, but we were not yet calling it backlog, primarily because it's a new market and storage projects, and we wanted to clear the first interconnection phase before moving those projects into backlog. So we do expect that for our year-end numbers, we will start seeing a decent portion of those projects moving into backlog.
An industry commentary question here. Altus Power is expected to go public via SPAC in the next 2 weeks. While recognizing that they may have many more producing assets than UGE currently does, they are being valued at $4 per megawatt, while UGE is about 1/10 that. Can you please comment?
Yeah, that's absolutely correct. So Altus is a company that we know fairly well in that they own some assets that we developed, because as people who follow the UGE story know, we used to sell our assets to funds like them. So they're in the process of going public. And my understanding is sometime in December. And frankly, we look forward to that being a good comp for us out there in the market. I think that they have more projects operational, but at the same time, even though our pivot is a bit new to owning our assets, we also feel like our ability to execute on our backlog has been proven through the 500 megawatts plus experience we have over time. So of course, just anyone could do the math on number of megawatts we have in our backlog plus operational and our current market cap. And if you do that comparison, you see a very significant disconnect between the two. So of course, we'll keep our heads down on moving our projects forward, and are confident that over time we'll see the right value for our assets as well.
What are the biggest obstacles to get projects to operation after the interconnection study is completed?
After the green light has been given on interconnection, we may or may not have had permits already in place at that point in time, and it depends on our strategy for a specific project. But permits are the other aspect to consider there. But aside from that, it really comes down to the engineering, the procurement of materials, and then the construction of these projects. Financing would be sort of along the lines of those as well. But it's really an execution thing. Those are, those are sort of our bread and butter that we feel really good about going through, step by step as time comes.
Okay, what % of your real estate partners' properties are in your backlog? This investor is trying to understand the runway with existing partners.
Hard to answer that question, to be honest. I think that, across, like we mentioned before, that the vast majority of our clients are repeat customers. These are real estate owners that often own very large portfolios and so on. So I don't have a percentage on hand in terms of what percentage of portfolios are in the backlog versus, still being looked at or not yet even being looked at. It's hard for me to say, but I will say there's like a lot of those repeat relationships that we look to continue to expand over time here.
Can you discuss the entry into solar storage in more detail? What do these projects do operationally, and will there be more to come?
Yeah, and I think that big picture, distributed generation, the sector that we're in, we see battery storage having an important role going forward. Anybody who you have to follow the company for quite some time, but around the middle of the last decade was when I would say that the story around storage really started to evolve, but the costs were still about 5 times higher than they are now. And so it was hard to get much off the ground. One portfolio that we did get off the ground at that point in time is what we refer to as our Rise NYC portfolio. In October, we had an announcement about the anniversary of Hurricane Sandy and those projects being built out. So we have had some experience, but what we've seen in the last maybe 6 months is that battery storage time is coming much more quickly now. And so, we've been looking at that for quite some time. We've also been looking at expanding into Massachusetts. Massachusetts has been a good solar market for many years now. And if you just look at the map of where we've been, it was a state that made obvious sense for us. And so we had someone join our team, Jim, who's just been a great addition on the origination side. And, kind of putting 2 and 2 together, really started developing based on the Clean Peak Energy Standard that was introduced in Massachusetts last year, a number of storage projects there, and of course some solar plus storage projects there as well. So that's how that came about. I think if you back up, I do expect storage to become an important part of the portfolio in other states as well. We have some pipeline projects in New York State that also have solar plus storage, and I expect that in the years to come we'll see it become more commonplace in other states as well.
You mentioned that Massachusetts is the third new market that UGE has entered in 2021. Can we expect UGE to enter more states before year end, or is that in 2022?
Yeah, I think given that it's late November now, I think that we were glad to have met that goal. But I wouldn't necessarily expect more states this year. But of course, the growth we've had in our pipeline and backlog this year, we're definitely looking to continue to expand as a company. And so certainly throughout 2022, we'll look to see that expand further.
And do you see Maine continuing to be a main driver towards your 2024 goals?
I think that a material driver towards 2024 goals, but not the main driver towards our 2024 goals. We've seen, if you look at our MD&A, the breakdown of states that we're in and so on, you've actually seen quite a diversity of states and projects coming in this year. And so on that basis, I think it also helps us probably better manage our future forecasts and so on in terms of timeline being in multiple states. But yeah, Maine's a good state. We like Maine, but we're really excited to be growing in a number of other states now as well.
Okay, there are no further questions, so I'll now pass the call back to management for closing remarks.
Yeah, thanks again, Marcel, and thank you everyone for joining in today. And of course, we're always here for any questions that you have, so feel free to reach out at any time. And we look forward to continuing to share progress with you all in the quarters ahead. So thanks again.
This concludes UGE International's third quarter fiscal 2021 conference call. Thank you for attending.